Right. We are going to review the numbers around property development. Uh, a lot of people believe that property development is a surefire way to riches, and that is, although true, it does come with a lot of risk and it has a lot of moving parts. Uh, because of this, we believe that instead of doing property development yourselves, it is actually better to be a lender or an investor in a development project. This is supposed to be a crane. Uh, and that is actually a much more safer way and much more surefire way. Obviously, property developers will always make more than the borrowers, but if you're a lender slash investor, you can make pretty healthy returns of between 8% to say even 20%. Uh, and it comes with a reasonable degree of certainty. Obviously, as the rate of return increases, your risk increases. Uh, Lower risk, healthier returns. Whereas a developer has higher risk and pretty high returns. So let's run through the numbers associated with a simple project. Let's say a very simple project, and in this project you are basically taking an old house and you're demolishing it and you're turning it into a couple of new townhouses. Standardized land subdivision project. This is what a lot of small time projects look like. So let's run through the numbers on these. Uh, let's say this house, along with the land on it, you bought it for $1 million. Okay. And you are planning to do development on it. If you're planning to do development on it, then typically what you won't get a 10% deposit or a 5% deposit. No, you will have to typically shell out anywhere between 20 to 30% deposit because this is meant for development. So which means that you will be out of pocket $250,000. Yeah. Now you can borrow up to 75%, let's say, on an average on this, which means your borrowings on this are $750,000, and this comes in the form of first mortgage. And because it is kind of a commercial development project, you will get anywhere between 4% to 6% interest. And most banks will be kind of okay to lend it to you, but they will not allow you to actually do anything with the project till certain preconditions are met, and we'll look at those later on. Now, what developers will do is they will aim for what is called as a long settlement. So they will say, I put in the deposit and give me 6 to 12 months to settle. And why do they look for that is because during this time period, what they go and do is they try to get the town planning done. So they go to the local council and they try to get the permissions. And once they get the permissions, they now officially are a project, which means that it's no longer just a house. They are actually a project which is worth something. Nothing has been done yet officially in terms of turning the dirt, but you're officially a project. At this point, there are two ways to go. The lower cost, more effort way and which is what normally used to be done. In this thing, what you would do in Australia at least is you have two townhouses proposed. What you do is you try to pre-sell them. Okay. Now, why do you do that is because you have certainty that once you build it, you have an exit lined up, which means that it's a much more safer project. However, in the recent years, this has changed because oftentimes, once the townhouses are actually built up, people can see them for real and they tend to pay more for that. Because again, from the investor standpoint or the buyer standpoint, it's certainty for them as well. Tangible things, a bird in the hand is worth two in the bush. So the more tangible things become, the more you end up having to pay for them. So what developers will also do is they will try to actually sell it only at the end. They end up making more money in that fashion. The second thing is pre-sales need marketing and commissions for the agents, real estate agents. And that of course means dollars. Okay? And that has to come out of pocket for the developer. And obviously the developers are not keen on that. The reason is property development is a very lumpy process, which means that it needs a lot of money at the start and throughout the development process. So this is the time axis, and this time axis keeps on going and going and going, and only when the sales are achieved does the developer make a ton of money. So yes, they do make a lot of money, assuming everything ends up going correctly, but the time interval between this is quite long and it's a lumpy process. The money only comes at the end, so it's extremely lumpy. So the developers, what they want to do is they want to invest as little, borrow as much as possible, and they're happy to pay high interest rates. As long as the money comes with less preconditions. And let me explain why this is the case. See, if you are a developer and you had to do pre-sales, then it costs you money and it also costs you time. Okay, so you have to do marketing, you have to do pre-sales. Both of them cost money and time. Whereas even if you end up getting 6% for the construction loan later on, because you have spent so much out of pocket and you also spend time doing it, it's better to pay 8% or even 10% to a private lender if he is not asking for pre-sales, because you're reasonably confident what it's going to sell for, so it's kind of worth it for you to say, okay, yeah, that's fine. And I'll go through the numbers now to explain why it is justified. So till now, we have seen that the developer has put 250K out of pocket and has borrowed 750K. And he has, let's say, 6 to 12 months of settlement. So 25% down, 75% to be paid later on with borrowing. So the longer he stretches this out, the less interest burden he wears on the 75% as well. Now during this period, he will get town planning done, get the permissions done, let's say he spends 50K for that. So till now, he is out of pocket by 300K. Okay, 250K plus 50K is 300K. Now, he is planning to do 2 townhouses, and let's say the cost of construction for each one of them is 400,000. Decent townhouses, mid to high range, which means that the total cost of construction is 800,000. Okay, let's say there are some other fees like consultants, council fees, etc., etc. There are a lot of fees which come into the whole thing. So let's say all of that comes to around 75K. Okay, so the developer is out of pocket 375K by now, and the total expense so far has been whatever has been for the borrowings, which is actually, yeah, not for borrowings, actually constructions. Construction is around 800K plus land was 1 million plus 375K. Just 1 second. Let me check my numbers. Plus 11 plus refund. Yeah, 800K for construction, 750K for the land settlement, and 375K for the developer out of pocket so far. So all of this comes to around 1.925 million, and any exigencies, etc., let's round it off, 2 million. So that's your total cost of the development of the project. Now, most developers will only take on a project if they think they can make at least a 20% margin on the cost. So which means that if this is 2 million, then with a 20% margin, you're looking at a GRV, or a gross realized value, of 2.4 million, which means the profit is 400K on an investment of 375K. So that's around just over 100% return. It's 106.67%. Let's say end to end this was a 2-year project. Now remember that all of this money doesn't go at the same time, but even if it did, you're looking at a return of excess of 50% annualized. Okay, which is pretty good. I mean, I think all of us would agree that a 50% rate of return is quite awesome. Now, what developers end up doing is, instead of putting the entire 375K out of pocket, they will put 75 or 100K, and they will go to high net worth investors or friends and family and borrow the rest. So which means that the less they put in, the greater their rate of return. Of course, they have to give a higher rate of return to their investors as well, but effectively by putting in only 50 to 75K, and even if they had to give away half of the return, you're still making 200K on your investment, which means the developer return actually can be 100% or more annualized. Which you are heavily geared over here, you're heavily leveraged, but for an experienced developer who knows what he's doing, He's pretty much in control. So that's kind of okay. But again, this requires a very high level of expertise, and a lot of things can and often do go wrong. So let's consider one important factor which we haven't considered over here, which is construction finance. Okay. Now remember, we discussed that 800K was required for construction, and let's say the entire thing is 12 to 18 months. It usually takes longer than you expect. So let's say interest 12 to 18 months and 8% interest. This is what a private lender will give you. It's slightly on the higher side. And this figure is actually misleading, and I'll explain you shortly why it is misleading. So on 800K, using very simple interest, they usually use compound interest, but let's just use simple interest. So the interest comes to around 186K on 18 months, 8%. And fees are anywhere between 2 to 3%. They are distributed into establishment fee, loan fee, brokerage, drawdowns. It's absolutely astounding to see how many fees they slap you with, line fees, etc. fees. So effectively, that 8% figure changes to 10%, 12%. I've seen it go up to 15%. Okay. And effectively, all of this, what it ends up doing is it eats up into the profits. 50% of the profit actually ends up going to financing. And what this effectively does is the developer's rate of return changes from 50% annualized, this is without him borrowing extra, to let's say 25% annualized. Now, given the fact that he's geared beyond this, his rate of return tends to be annualized 50%, even after all the fees, etc., etc. So for him, agreeing to 8 to even 15%, and he actually ends up paying to his investors 20%, 25% even, that's okay, because effectively he is making 50% annualized, and he's very much in control of the whole thing. As long as he knows what he's doing, he's happy to pay that. Which is why in real estate development, if you don't know it in and out, it's perfectly fine to be a private lender / investor. Now, the thing with real estate is it requires huge sums of money. So these days, there are new fractionalizing platform. I actually ran a platform called Estate Baron for several years, and what we did is we did crowdfunding for property developers, and we basically helped them fractionalize their fundraising efforts. So we used to basically run what was effectively a small scale IPO and allowed the developers to raise money from the general public. Concrete started with the same idea. Instead of going Web 2, and we decided that we could leverage blockchain and reach more investors, and we started as an STO platform, and then we eventually moved towards decentralized finance. And the rate of returns which come on the OTL or the Concrete platform, although Concrete is not in the financial investments business, what we do is we take the property development project or property, we tokenize it, and we put it on the money market. So we have the OTL over here, which is expected to run in a fully decentralized manner, so that people from all over the world can get strong returns in a trust minimized manner. It's not completely possible, at least at this stage, to have trustless, but we have a roadmap by which what we want to do is we want to reduce the trust, and eventually what we really want to do is we want to get away from actually proposing collateral, and we are going to allow the community to choose what kind of collateral can go on the OTA. And this can be real estate, this can be receivables, this can be car loans, personal loans, stocks, etc., etc. And we have a complete roadmap about how we can reduce the requirement of manual intervention in case of enforcement. But the reality is there are a lot of problems in the real world which can make you a lot of money if you can actually solve them. And DeFi allows an opportunity by which investors from all over the world can deploy their assets via the OTL and lend it to real world projects and make a strong rate of return, which is anywhere between 8% to 10%. But depending upon which asset is, it can be higher. So that's it. Thanks so much. Cheers. Bye.